Greetings, everyone. I'm excited to welcome Alex Jekowsky, co-founder and CEO at Sense. Alex, welcome to the show.
Thank you so much for having me.
Hey, this is the first time, Alex. I love your setup here, right in the heart of your software and hardware play. So looking forward to diving in here. But first, tell us a little bit about your background.
Yeah, I think I don't have a very institutional background in software or payments, fintech, marketplace, vertical SaaS, whatever it is. I think my background has always just had a love for diving very, very deep into things in my personal and professional life. My first company I started was I didn't even probably call it a SaaS company, didn't call it fintech, didn't call it all the buzzwords that I guess I know now and might call it. But my first business I started actually when I was in college at Chapman University and ended up leaving school to go full time on that business after my sophomore year. And it was called Ulingo, which was a payments platform for college campuses, really like an embedded marketplace. Again, I could have called it an embedded marketplace, fintech, vertical SaaS, all of that, but we just thought it was a marketplace for college students to really go about their student life commercial habits. So meal plans, membership dues, peer-to-peer exchanges, things like that. We sold as white labeled system directly to college campuses, integrated in all the campus cards, single sign-ons, et cetera. Ended up selling that after running it for about 5 years to a company called Moto Labs, stayed on at Moto as an executive there. And, during that acquisition process, had some liquidity and was interested in, maybe investing in an alternative asset. Again, I love getting deep into the higher education space, going to the National Association of Student Affairs Professionals Conference and EDUCAUSE, higher ed tech consortium of CIOs, all of those things. So I thought a small business would be another avenue for me to get deep into. I thought about a bar, maybe a restaurant, but I had just heard through someone that laundromats were amazing investments. I knew nothing about the laundry business. Who the hell was going to laundromats, running laundromats? I had, maybe a preconceived notion of the operator profile and the quality of that business. So naturally decided to get super deep into that and became really excited at the opportunity of investing in and owning a laundromat, or in reality, three I was looking at. And as I got closer to making a purchasing decision, I thought, all right, well, how the hell do I run these things? Because I got an earnout and I can't buy myself a job when I got to focus on performing for the parent company. And so I looked around and said, is there anything? Is there a toast, a mind body, a slice, a Boulevard, a Gloss Genius? The list goes on for the laundry vertical. Turns out there wasn't. And my brain started turning a lot more to getting back into building more than, building software for these operators versus being an operator myself. So I think it's kind of my background of getting into this business, as well as, higher it's an institutional SaaS in general, is just being in the higher education space as a student, saw gaps, wanted to build, looking at investing in a laundromat, saw gaps, wanted to build. And that's kind of been the core of all the things that I do.
Well, I love that background. Appreciate that. And definitely you're going to have, when we talk about Sense, which I love the name, by the way, maybe that's because I'm a CFO, but you have to explain for those who are just listening to this right now, kind of your setup and what you're surrounded by, which I love.
Mhm.
But yeah, let's talk about Sense. Tell us the products and or services that Sense offers.
The thesis in building the business was not to be a POS system, not to be a hardware provider, not to be a single function to help a business owner incrementally, right? Our vision in starting the business was to deliver an all-in-one solution to one of the most stable, recession-proof, attractive from an investment perspective, but also critical services for a society on Main Street. And, a laundromat or a dry cleaner, a garment care and repair business, as we think of our market, there's about 100,000 retailers, call it 30 to 35,000 laundromats, 45,000 dry cleaners, and the rest of, tailors, cobblers, alterations, et cetera. There's a lot of different revenue streams and a lot of different operating models. It's not just as much of a coffee shop, which is you make a cup of coffee, you sell it over a point of sale, and maybe you do some delivery, and that's the function. There can be self-serve where I do laundry in the machines, I drop off my clothes or dry cleaning. There could be alterations, which are a different kind of actual POS process. And I'm measuring and making alterations versus just cleaning. Is it by garment, by bag? Is it pickup and delivery where there's a pickup and a return delivery for the same order? Is it commercial laundry? Is it linen rentals? There's a lot of variation. And so delivering just a point of sale or just one solution is not really going to incrementally help a business owner grow, manage, and understand. And that was always the core. So we started with the POS to help a laundromat run the wash and fold side of the business, which coming out of COVID COVID wasn't a change agent in terms of consumer habit, but it was certainly an accelerant in the behavior of the consumer wanting to drop off their laundry and not do it themselves. Even the lowest of income consumer trying to spend less time doing their own laundry, even if it's an incrementally higher spend. And so the point of sale was our kind of wedge product to give that small business owner the ability to track, wash, and fold and kind of the over-the-counter laundry services off of pen and paper or the non-cloud-based legacy systems in a store, really not institutionally backed by venture capital or with DevOps and business development and engineering and squads and all the kind of things that kind of a sophisticated technology company brings. So again, what we're surrounded by here is the breadth of our product line, missing obviously some things, but the point of sale for the counter, the different kinds of hardware products that convert coin operated machines to pay by card or pay by stored value kind of infrastructure, because this is what delivers an all-in-one. And if you can't deliver a consolidated solution to an operator, you're just adding to the Frankenstein system that they've had to put together. And that's what I think presents a really unique opportunity in this industry, is to be a trusted vendor delivering that really command center and source of truth for a small business owner.
I love that. And yeah, so you're surrounded, and I was going to say you're not in your home office, but maybe you consider this your office, kind of laundromat, with the hardware around you. And, one question, different from pure play SaaS, where, so this kind of, I'd say, all in one system, plug and play for Main Street industries, laundromats, dry cleaners, alterations. And with the hardware that you're surrounded by, like with, say, traditional software, right? We may have some setup, configuration, onboarding, some services revenue to get them up and board, up and running. And on your side, how do you handle like getting this hardware out and implemented and installed for your client base?
Yeah, I mean, a lot of people are afraid of hardware, and rightfully so. A lot of CFOs are afraid of hardware, and rightfully so. It's usually a margin drag. It adds complexity in inventory management, supply chain, and the billing process can be different. And how do you fit that into your billing process? Which a lot of companies are built for SaaS billing, not always for the hardware infrastructure. But hardware-enabled SaaS can be an incredible tool, not just for cash flow to a business, if you can build a high margin product, but from a retention driver and a value driver. So we're big believers in the power of hardware if built well, priced correctly, where it's affordable and competitively priced for the operator, but leaves us enough margin to drive value. In terms of implementation, you're exactly right. I mean, the implementation time from when a customer signs a contract to before they go live is the highest rate of churn risk, right? That's where something can fall through out of their control, or you can have always change of heart, anything like that. So a really high quality onboarding experience for our hardware and software leads to the length that LTV and the exponentially higher rate of retention, because this is our first chance to introduce ourselves as their partner, right? And so the beauty of our industry is distributors, laundry equipment distributors are immensely helpful because they're selling the actual laundry equipment. And typically they're also selling our hardware that goes on machines. They handle a lot of the installation, part of that process directly with the operator. So we're able to be very low touch from that perspective, but we're very high touch in terms of support and being hand-holding with the operator along that process. The POS is largely sold through our system, our 3PL, our internal implementation team. And we've spent a lot of time actually separating out customer success, implementation, and support to ensure that we have all the right processes and steps and procedures internally to create a very expeditious onboarding experience, along with a high quality post implementation and post sale experience when it comes to customer success. So getting the hardware out and managing our fulfillment centers correctly so we can get a POS out quickly to an operator who wants to get going and wants to start tracking that revenue in their system, having things pre-built within the process, even small things like this sticker here that has all of our help center information, contact information. So once it's out of the box, they know exactly who to reach, are all things that have helped guide that implementation. But the number one thing we've done is actually split that out of the functions of either support and CS and have implementation be a dedicated team where we're just focused on making sure that operators can get everything set up for their store and get transacting as soon as possible to benefit them, but also the retention rate once they go live is obviously in any SaaS product exponentially higher than this implementation phase that we can experience.
Yeah, no, that's really interesting, right? That delivery of the revenue, getting them up and running, so important for, like you said, LTV and long-term retention. So it sounds like a mix of equipment distributors, which makes sense. They're out in the field selling your hardware, installing some of your hardware, plus your internal team. Now, I could see with this business model multiple revenue streams. So tell us how do you make money? Is it subscriptions and processing hardware revenue? Tell us about your revenue streams.
Yeah, I mean, you're exactly right, right? The recurring revenue part of our business, what drives our enterprise value, is we care about lifetime value, high recurring revenue, and ARPU expansion through our payments and software products. But again, hardware for a lot of companies, the best in class POS public facing companies that have lower margins than ours by a factor of 2 to 3x, is largely due to the fact that hardware tends to be a loss leader or part of CAC because you have to sell that hardware because they need it. They need this tablet to run a point of sale. And largely you have to sell that at negative margin or at cost to be competitive because small business owners can be really cost conscious and they can feel that couple $1,000 hit. Fortunately for products like ours, even if we don't make a huge margin on our POS, these hardware products have a huge R&D investment. We're able to be competitively priced while making a good margin where this can actually be strong cash flow for our business. But obviously it's not a factor of our ARR. But when I sell one unit of hardware, the payments and SaaS along with it has that long tail value to really drive additional revenue for us. So we care very deeply about making sure that we have high retention and being great partners to our customers. And fortunately, we don't have to convince operators to use more parts of our product to drive greater revenue for us. We try to price the product and build functionality that is linear to their needs. If somebody needs to get into pickup and delivery, they're going to purchase our pickup and delivery software. That's going to be best in class for that part of their business. So it's not a constantly trying to upsell them on some, like a snake oil salesman, just trying to get them to buy that next thing. It's understanding, what do you need to do to run your business? How can we help you today? And then build innovative products that you will deliver and that you will receive an ROI from. And that helps us consistently kind of grow that recurring revenue profile. So payments and SaaS are the core, but there's obviously meaningful hardware in our business. So the ARR profile doesn't always match our actual year-to-date revenue
Right.
with all the hardware that we're able to sell.
Yeah, I love that. And I always ask about industry served, but it's very clear, right? Laundromats, dry cleaners, alterations, the big, those main street industries. And tell us though, ICP, I'm guessing you're trying to reach, the business owners at these small businesses, but I'm guessing there may be larger franchises that you could be after. I don't know, in the dry cleaning industry. But tell us, like, who are you trying to reach out to prospect?
In the beginning, it was more of the, full service laundromats. That's the, have healthy wash and fold delivery businesses looking to invest in their locations because our core product is not, we're not trying to do a race to the bottom on price. We want to deliver meaningful value that can deliver a meaningful ROI and price accordingly so we can do well in our business while our operators do well in theirs, right? It's a very symbiotic relationship. We're only successful if our business owners are successful. Charging somebody too much for a product that they can't afford based on their revenues doesn't make any sense. And so in the beginning, we wanted to focus on the high volume wash and fold pick up and delivery operators we could really help succeed. And as we've scaled our product line, being able to go down market to have a much more affordable POS only product and enable those kind of, I don't think of it as like a bronze, gold, and premium pricing because we don't like to operate that way. We say, what do you need? And what can we deliver to you? If you only need a POS, you're not going to pay that much. If you need POS delivery, marketing, a mobile app, a hardware system, you're going to pay more. It'll be extremely competitive and save you money. But that's how we kind of have thought ourselves around making sure we reach the right ICP, where now it's really anybody that is what we call a laundrypreneur. You could have a store or not have a store. I had an operator come in today who's launching a pickup and delivery business because they're looking for a laundromat to buy. They don't have one yet, but they see a big opportunity to start to build a customer base. So they bought a tablet, a printer, a scale, all this stuff from us, and are launching an online only brand and are going to be driving around, picking up people's clothes, doing it at laundromats themselves until they can find a location. So it's anybody who doesn't have a store to the largest enterprise locations of 80, 100 plus stores, the franchises, et cetera, are looking at us as really the industry leader. And it's been incumbent on us to make sure we're building a product that is hyper custom, but can fit all the needs of the various ICPs that we now are appealing to.
That's great because I can see you're helping them with their business model potentially or additional revenue streams based on your software hardware setup. So I love that. So let's talk some facts and figures here. What year did you found Sense?
I mean, we launched our seed round with Bessemer in 2021. So that's how we put the clock on it until, we went full time on the business and really started building. I've been in the industry, been a fan of the industry for many, many years as a prospective investor in it. We really started the business in 2021.
Okay, 2021. And do you have a headquarters location?
So our headquarters is based here in New York. We're in Soho, moving to another office in Hudson Square. So based in Manhattan, but we're a fairly distributed team, probably
Mhm.
50% of our company distributed all across the US.
Okay. And what's your current team size?
I think I know we just had some hires come in. I think we're at 80
80?
now,
Okay.
roughly. We have some offshore folks as well, but in-house around 80.
Okay, perfect. And anything you want to share around your scale right now, whether that's customer count, ARR ranges?
Yeah, so we have about 1 in 14 laundromats in the US use one of our products today. And I'm sure this will, a quarter from now, that number will hopefully, continue to shrink in terms of 1 to 13, 1 in 10, et cetera. But as of today, around 1 in 14 stores, around 2,900 locations utilizing our products. In the laundromat space in particular, we have about over 3,500 shared laundry rooms, something I didn't mention that we're getting and moving pretty aggressively in the real estate space, in manufactured home communities, RV parks, hotel chains, universities, and multifamily properties with shared laundry rooms, whether it be a high rise or a garden court style apartment complex. So it's really like laundry day in America through Sense and our local SMBs. That's the thesis. And it's not, of course, about our brand, but we want to power every element of this vertical. And that's why we built the product that we've had. We're EBITDA positive. So that's been a huge help for us as we think about our scale and growth, particularly in a market that is challenging to raise capital in. And, the scrutiny over path to profitability is higher than it's ever been, and rightfully so. I think it's been a very healthy thing. So we're fortunate enough to be there. And look, we want to march to 100 million in revenue in the next year or two. And we're making some pretty meaningful strides to get there is what I'll say. We like to make little press releases and announcements when we hit the kind of major milestones, but we're excited with the growth profile that we've been able to have and see it, but we feel like we're just scratching the surface in terms of our broader opportunity and where
Yeah.
the
So
industry is at even
yeah, it
right
sounds
now.
like you've reached a nice level of scale. And of course, pushing for 100 million. Tell us about your current go-to-market. Is this a mix of sales and outbound emails, inbound marketing? Like, tell us a little bit of how you're finding your prospects.
I mean, a lot of it's inbound.
Mhm.
And I think that's the beauty of this industry is the owner operator has become over the last maybe 10 years plus, but around 10 years, it's a very sophisticated owner operator. You don't get in the laundry because you love the fashion and the way that clothes smell coming out of the dryer. And you don't do it for that reason. You do it because you love money. You do it because you are an entrepreneur at heart and you want to have a vehicle for that. You do it because you want a cash flowing alternative investment that might not be passive, but isn't a full 40-hour a week job. And so operators are looking to consolidate. There's a vacuum here. We're not trying to change the way operators run their business. They're all wanting what we're delivering. And that's the pressure that we have, is because we know they have a clear view of how they want to operate their business. And they understand now, especially by being customers of Sense, the opportunity of what software can deliver to them and great hardware can deliver. So, generally our motion has been inbound, but we've really started to excel in outbound with an SDR. You have that kind of top of funnel marketing and SDR motion, and then our account executives that are doing thorough demos, making sure customers know exactly what we have. So when they're onboarded, they have a high chance of going live and having success with our product. And the other motion that we're really passionate about is the distributor. It's a unique element of this industry where you cannot buy, as I said earlier, commercial laundry equipment from a manufacturer. You have to buy it through a laundry equipment distributor. And because they're having that relationship already with the laundromat owner, the ability for us and for them to make money distributing our hardware products and becoming, lead gen tools for our SaaS products as well, enables us to build a really efficient go-to-market motion. And I don't necessarily think this is a business where we need hundreds of sales reps, right? We want to build really meaningful and genuine relationships with our customers. This is not a transactional kind of sale. This is get to know the operator, get to know their business, and really be their partner from the SDR, first cold call, to the demo, to the implementation, all the way through customer success. That is a meaningful relationship that we want to have in the long term with these business owners. So that's kind of the general makeup of the go-to-market motion to get them to the funnel.
Yeah, appreciate that insight. So inbound, outbound, and you mentioned the owner operator becoming more sophisticated as they invest, say in laundromats. And I follow, I think it's Cody Sanchez talking about Main Street businesses, these businesses that seem, simple business model, but have nice cash flow. right? Good ROI. So that makes a ton of sense. And so, Alex, switching over to the fundraising side, looks like you've raised a little bit of capital. How much capital have you raised to date?
In venture capital, around a little over 77 million so
Okay,
far.
77 million. And looks like what the latest round Series B about 40 million.
Yeah. We just announced our Series B, I think a couple weeks ago, $40 million round led by Camber Creek, who's been super strategic for us on the real estate side, which we're really excited about pushing more into the multifamily, the amenity of laundry and connecting that laundry volume to our local operators, working within the shared laundry rooms, but with participation with our past Series Seed 2 and Series A leads, Bessemer, and our Series A lead, Tiger Global, and brought on, what I'm most excited about, really, out of all of our investors, is the angel investors, the C-levels and founders of Toast, of Olo, of Jobber, of Built, of Stripe, et cetera, that have really helped us see around corners and helped us understand, how to make meaningful impact in the SMB space and avoid some of the mistakes that they've made to accelerate our growth faster to get us to this point.
Yeah, that's great. Yeah, some big name investors there. And let's talk about that Series B. I interview a lot of founders raise pre-seed, seed, Series A, beyond. And Series A seems to be, hey, we've see signals, we've got some product market fit. Now we're ready to invest, need more product, need a sales team. Tell us about that Series B. What on your side for Sense, what was the motivation, the reason behind that Series B round?
You know, I think M&A is really, when there's dislocation in the market, I think there becomes a lot of opportunity for, strategic M&A. A lot of my job when I think about the beginning of a year is how do we accelerate our growth and de-risk our execution? We have very little risk in our industry from the lack of competition, the quality and breadth of our product line, the moat to enter the space, and our existing market penetration. And so we think, how do we accelerate that and accelerate our growth, triple digit growth year over year consistently for as long as we possibly can, while de-risking our path to get there without leveraging ourselves too deeply and presenting risk when things are moving well. And M&A becomes an opportunity for that, particularly around an area of the business that we aren't, I would say we're proficient in, but it's not our core, and that would be hardware. We had our own hardware business, and we ended up buying this company in March of this past year. And that was a huge reason why we said, this is actually a unique opportunity for us to acquire this business, take all the momentum, let's raise a Series B in order to fund the kind of the combined business, the added on entity this would be our second acquisition, to accelerate the growth of our hardware business while de-risking the execution. Because this product, the LaundryWorks system in multifamily and in the laundromat space, is nearly 100% customer retention. I've never seen anything like it in my life in a verticalized product. And so they've really delivered so much value into the development of our existing hardware, as well as what we can deliver to them, and us building the future versions with them of their hardware solutions. So that's a accelerate and de-risk. And let's take the Series B when it's a hard market and we don't know what the future is going to look like. And let's get great cash flows to our business through our kind of our standalone EBITDA and profitability, while having a war chest of capital to be able to continue to be both thoughtful but aggressive at times, that we can capture the opportunity that we're in. And, hopefully it should set the market that this is not one that new investors want to invest in other startups trying to enter the space, because it's going to be real hard out there for anybody with our access to capital, the quality of our capital, the quality of the partnerships, the strategic nature of them, and kind of what it's enabled us to do from a market position standpoint and penetration.
Yeah, I mean that's impressive, right? If you're saying, "Hey, we're EBITDA positive, we're growing at tremendous rates," which you don't always see, high growth, but also, yeah, you're burning a lot of EBITDA in cash. So, M&A, M&A makes a ton of sense. And so, for the other founders listening right now, obviously, you founded 2021, huge acceleration, raised a lot of capital. In that journey so far, Alex, as a founder, any fundraising lessons learned that you'd like to pass along to the SaaS community?
Ooh, yeah. I mean, it is, I've fundraised in a bunch of, now, I mean, not that long, but it's a bunch of different markets, right? I during COVID, but before the kind of crazy COVID boom, and then the COVID boom of 2021, 2020, closer, because we raised our Series A at the end of 2021. And then back into 2023, when it's much more compressed, when we started kind of evaluating the market, evaluating what things were going to look like, and then really started to go full bore on it, towards the end of 2023. I'd say, first of all, have your story. I mean, it depends what stage, right? I mean, the joke is, right, don't let numbers get in the way of a good story in the early stage, and don't let a story get in the way of your numbers at the later stage, right? Because people want to see that you have a vision. They want to see you have conviction and you're actually building something. And then also be thoughtful on the investors that you're approaching. What kind of business do you want to build? If you're not trying to build a public company that can do hundreds and hundreds of millions of ARR, that's going to have a multi-billion-dollar outcome, that's okay. Not everybody has to get to that level to build a really successful business. You can be awesome having an outcome where you get to a 20, 30 million ARR and sell for a couple $100 million in high retention, good growth, and then back into the kind of investor profile you want to make back their fund, to know what kind of wins they're looking for, because that's going to help you kind of weed through the conversation. So I think, do enough research to see what kind of outcomes is that investor looking for based on the size of the fund, what stage of life that fund is on. You could do some kind of background information on that, which can be accretive. And I think really you gotta, in my experience, investors can smell passion from a mile away. And the one thing I hang my hat on is that what I lack in at least my own intellect, and lack in my own abilities, and lack in every other thing, the one thing I'll never say that I lack in is passion, conviction, and care for what we're doing. And if somebody sees that, they might have a belief that you'll find a way to make it work. And so, my last one would be the difference between somebody succeeding and somebody not succeeding would be a mix of awareness, but also resiliency. Like this Series B was not easy. The acquisition was not easy. And there were a lot of times where, boy, you got to almost love waking up and getting punched in the face every single day. And your success will be, can you keep waking up and getting punched in the face, or do you just want to stop? And can you just not do it? And that resiliency, and there's a great quote from the CEO of NVIDIA when he was talking to the Stanford Business School graduates, basically saying, resiliency and perseverance is what is going to make you successful. And he wished upon them immense suffering and pain in order to kind of build that resiliency and perseverance, because that's what it's like. It's not easy. It's often not fun. But if you have the stomach for it and you persevere, you can win. So.
Yeah, I love that. Right. Some weeks you feel like, hey, we're going great. Another week you feel like the ship is sinking. So yeah, it's just hard. And I love, story is so important. Where it's seed round, and like you said, now story is for Series B, but also supporting your story with numbers, which is very important. And you mentioned founder investor fit, and a nuance there, which is really important. Where if you're looking to knock it out of the park, become a public company, getting support from that fund who is also wants those same outcomes. So appreciate that insight. So Alex, at this stage of your business, do you have, and this could be multiple numbers or metrics, but any favorite numbers or metrics that you're focused on to guide the business?
Yeah, we have our we call our 1-to-1 ratios, and there's 3 of them, right? So it's 1-to-1 say and do ratio, right? Don't say 2 things and do 1, and don't do 2 things when you say you're going to do 1, right? Have that 1-to-1 ratio. We want to have our 1-to-1 CAC to ACV at a minimum. So the payback period on a net basis is 12 months or less, right? So we want that 1-to-1 payback.
Mm-hmm.
And then we want 1 million of revenue per every headcount. I don't believe in the vanity metric of headcount. If we could be sense exactly where we are today with 6 people, boy, I'd love it. It's not about hiring massive amounts of people. Of course, I love a ton of people in our office, and I love, all the engagement that we have. And it's such a fun experience to have coworkers. But hiring for the sake of hiring and throwing bodies at problems has been probably the times in our business where we've been both the least efficient, presented the most risk, and have executed the most poorly for a variety of reasons. But headcount just doesn't immediately solve problems. So having, 1 million of revenue per every 1 headcount and letting it scale from there is where we're really aiming for. And those are kind of the 3 1-to-1 ratios that guide our business.
Yeah, I love that. The payback, say and do ratio. Plus, if you're going to shoot for get 1 million of revenue per FTE or headcount, that's even above, right? Best in class. That's like in the stratosphere there. So appreciate that insight. So Alex, as we wrap up here today, what's coming up next for Sense? I'm sure there's a lot coming up, but what's coming up this year?
Yeah, I mean, I think we're like I said, I think we're really excited about a bunch of the different new products that we're offering, which I'm not going to reveal just yet, but we're really pushing into getting deeper, both into the laundromats, but into the laundry vertical, working more with multifamily apartment buildings in the shared laundry rooms, creating that connection between the small business owner to these buildings so they can grow their volumes, as well as actually powering the shared laundry rooms themselves with our hardware and software, and working with the people that really manage those laundry rooms, which are amazing companies that have huge opportunities in terms of what they're doing to support these buildings. So our focus this year is just continue our push for innovation, manage the core functions of our product, but continue to get deep into this industry, right? And the work that we do across the other elements of this vertical directly go back to impact all of the work that we're doing in just the laundromat space as well. So getting deeper in dry cleaning, getting deeper in route and multifamily laundry, getting deeper in more functionality and feature set for the laundromats is really where we're focused for the rest of the year. And then 2025, well, I guess we'll have to do this again sometime and see
Yeah.
where we ended.
We'll have a check-in. So yeah, definitely exciting time. So I'm looking forward to following your journey this year and next and beyond. So Alex, really appreciate your time today sharing your journey. If listeners would like to learn more about Sense, where should we send them online?
Yeah, www.trisense.com, TRYCENTS.com. You can find me on LinkedIn. My email is alex@trisense.com. And I think everybody figures that out by now with the amount of cold emails I get from salespeople and things like that. So yeah, I mean, look, we're hiring in a bunch of different groups and I love working with founders. I learn a lot in that experience as well. So always feel free to reach out. And if you're interested in getting a laundromat business, you have a laundromat. I know some CFOs that are also laundromat owners. And so anybody listening to this that's interested in the laundry business, always love to chat. And
That's great. Well, if you'd like to learn more, listeners, check out trisense.com or email Alex. And they're also hiring, which is perfect. So appreciate that. So again, Alex, appreciate you sharing your time and your experience and your journey today.
awesome. Thank you so much, man. Appreciate it.
Thanks.